In Petroleum Profit Tax Act, any expense can be allowable as long as it is wholly, reasonably, exclusively, and necessarily incurred for petroleum operations in the upstream sector, right? So you necessarily do not have to cram all the expenses. But then when you spot an expense, you must be able to know whether it is allowable or disallowable, right? So rents, for example, royalties is an allowable expense, custom duties, stamp duties, excise duties. You know all of this because you know company income tax, right? Interest on loan is an allowable expense, okay, provided the loan is at market rate, okay. I mean, it's not a related party influenced rate. Repairs and maintenance. You can have pension is allowed, pension contribution to approved bodies, okay, so it must be approved. I hope my handwriting is clear enough. I'm trying to be fast. I don't want to skip this explanation phase because it will stress me out during the exam question. Education tax is also an allowable expense, and I'll show you how to treat it in a bit. Number 8, bad debt. Okay, so you don't have to cram it, just know bad debt specific, okay, not a general provision for bad debt or anything. They will specify. There's a way the question will coin it that you will know whether you should allow or disallow. You can have admin expenses, sha. Number 1 will be anything that is capital in nature, anything capital sum. You cannot expense it. So if you see something like 50 million that they used to probably build or buy a new land for petroleum activities, you do not expense it, okay, so you deduct it. It is disallowed. Depreciation, yes, this depreciation is very important. If you don't know anything, you should know depreciation. Then another thing is expenses incurred to acquire information, okay. I remember this in petroleum profit. Expenses incurred to acquire information on petroleum profit, because the tax authorities believe that if you need any information, you should not get it from an external source, okay. You can also have insurance, all these insurance contributions, or any recoverable amount under any contract of indemnity, right? Donations, yes, donations to ecclesiastical bodies, charity, except if it is approved. That is when you can allow. Custom duties, yes, you know I said custom duties, we have it here, but custom duties here, custom duties that relate to product. You know what custom duties are now? Customs. When you are importing something, okay, so you pay to clear. That's what we call custom duties. So you have those products that are manufactured in Nigeria, or they have substitutes in Nigeria. Why are you importing them when you can actually buy them locally? So you will pay custom duties on those petroleum products, or some goods that are for personal use. So maybe while they are importing some petroleum related supplies, then you now include products that are for personal, maybe for the manager's use or something like that. But it does not just relate. It's not wholly, reasonably, exclusively, and necessarily for the purpose of petroleum operations. You exclude, okay. Number 7, any other non-petroleum operational costs. We are basically saying the same thing. It's not exclusively for petroleum operations. They should all be disallowed. That being said, let's go to the third variable, okay. The third variable, which is what? Education tax, tertiary education tax, Petroleum Profit Tax Act. So I know that education tax is now 2.5%. It must be deducted, okay, before arriving at adjusted profit. So this thing means profit. Now, education tax has a standard formula. Tertiary education tax is what? 2% of your assessable profit, okay. Remember company income tax. But because you have to deduct your education tax before you get adjusted profit, it is going to be 2 divided by 102. I know most of you know this if you've done taxation class. The 4th is loss relief and the 5th is capital allowance. After we do all of that, that's when we can solve question, okay. So loss relief. Remember the format I said, right? You have income, you have expenses, okay. Then it will give you your what? Adjusted profit, right? When you treat loss relief, that will give you your what? Accessible profit. Then when you treat capital allowance, right, that will give you your what? Chargeable profit. And that's the end. Then you can charge tax upon this. So it starts with income expense. Now it's in this expense that your TET is tertiary education tax. So loss relief is treated, right? So loss relief is treated upon or deducted from, it's always a deduction because it's a relief, deducted from what? Adjusted profit to get accessible profit. Okay, loss relief can be treated indefinitely if it cannot be relieved in the current year, okay, under consideration. Do you understand? Another thing about this loss relief is that it can be carried forward in the sense that, okay, you can choose that you don't want to relieve that loss this year. Do you understand? So the company has the right to defer. Yes, loss relief can be deferred, okay, like you are postponing it. You can defer the utilization. It can be deferred to be utilized in the future, and the application has to be done in writing within 5 months, okay, within 5 months from the end of the accounting year under consideration. From that accounting year of that account you are working upon. I hope that English makes sense. Can you see that? Okay, so now the next thing, which is the last thing, is capital allowance. Okay, capital allowance. Capital allowance, you know what capital allowance is. We have a class on capital allowance, but in PPTA, capital allowance is divided into 3. Okay, now capital allowance brought forward, that is, there is something you are bringing from the previous year that was not relieved. Petroleum investment allowance. Okay, then annual allowance. Remember that in your SITA you have initial allowance, SITA, right? Initial allowance and annual allowance. Remember, then you can also have capital allowance brought forward, right? Just like you have year 2, the one brought forward, your initial allowance, but it's called petroleum investment allowance. It's just like your initial allowance granted on new assets in the first year, then annual allowance every year. So for the capital allowance brought forward, there's nothing complex. They'll just give you a figure and you bring it forward. Now for the PIA, which is the petroleum investment allowance, it is always granted in the first year of the assets, okay, in the first year. So if the account under consideration is 2015, now let's say you are doing 2015 account, any asset bought in that 2015 will all enjoy PIA. A certain portion must be exempted, okay, as capital allowance to reduce what? The chargeable profit that will be subject to tax. That is what capital allowance is now. Capital allowance always helps your tax to be reduced, right? So the PIA is divided into 2. We have onshore and offshore, right? Onshore means what? On land. That's what it means. Shore, onshore. You know the shores of a sea. This is a sea. Now this is water. This is inside the water. This is the shore. So onshore is on land. Is land that is here, right? That is surrounding the water. So onshore is land, okay? So if the asset is located onshore, the qualifying capital expenditure, if it is located onshore and it is bought in that year under consideration, is a new asset, you do what? You give it 5%. That is, you charge 5% of that, of the cost of that asset. Offshore, okay, if the asset is offshore, offshore means what? It is inside the water. That is continental shelf. Okay, some textbooks will say even ICAN continental shelf, or they will say territorial waters. Mommy water, right? So offshore basically means inside water. Okay, so how deep is it? The depth means it has more value, right? So if it is up to 100 meters deep, you know 100 meters now is not far. When you just drive 100 meters, you can even trek 100 meters in 2 minutes. Okay, so 100 meters deep, you grant what? 10%. Very easy. You can memorize all these things. You can see I'm writing it out from my head, but I read before starting the class. So greater than 100 meter to 200 meter, you give what? 15%. Sorry for the dogs barking. It's midnight. Is this next compound? I don't know why the dogs are barking. We don't have dog in our house. Then Greater than 200 meters, anything 200 meters above, they collect what? 20%. Okay, so look at 5, 10, 15, 20 now. Makes sense. Annual allowance. Now, annual allowance, it is the same for any kind of asset. Remember that in SITA, you have building, maybe 25, 15. That's initial and annual. Office equipment, 50% and 25%. But so all of them, they have different rates. But here, they all have one rate, that is 20%. Meaning that the asset can last for only what? 5 years. Because any asset that is 20% will last for 5 years. Any asset that is 10% depreciation or capital allowance will be in the books for what? 10 years. If it is 50%, 2 years, okay, because the total is 100%. So this one says in year 1, allow 20%. Year 2, 20%. Year 3, 20%. Year 4, 20%. Year 5, don't allow 20%. Do 19%, because from year 6 onward, you want to retain 1% in the books until you can provide a certificate of disposal issued by the Minister of Finance. When were you seeing that part? This is the problem of filming with people, and I want the camera to be very close to it. Okay, I said you keep 1% in the books. So you keep carrying that asset in the books until it has been disposed, because sometimes they not dispose the assets. The summary is that you retain 1% in the book, okay, until the Minister of Petroleum or his representative has issued a written certificate of disposal. Do you understand? The restriction of capital allowance, because you can't just do whatever you like. It has to be restricted, okay? Restriction, that is per year, because if you add all this together, it could be huge. So capital allowance is restricted to 85% accessible profit plus 170% PIA. See, 85 times 2 give you 170. So just learn it like that. 85% of your accessible profit plus 170% of your petroleum investment allowance. You know your petroleum investment allowance, what we talked about here. Don't cram anything. If you solve 4 questions, it will stick to your head. All that being said, let us solve question. So which question should we start from? I have November 2018. I have May 2019 here. Let's start from May 2019. May 2019 was actually when I wrote my skills level. So May 2019 ICAN question. I may break the class into 2. I don't like those long classes. So let's read the question as you have on the screen. Let me open it on my laptop here.